So let's begin our daily analysis and get the charts. Here we go. So we have the Nifty index here, right here. The bands are seen there, and it's very clearly consolidation. It was consolidating yesterday. It was consolidating day before yesterday, and for the last 4 days, basically, it's doing nothing but remaining just close to the 25,000. That's it. Flat is close today as well. Just flat sideways consolidation what's happening with a bearish bias because it's below the median of the Bollinger Bands. Let's and look at the close. Absolute flat for NSE. And look at Banknifty. That's completely a divergence that you see here. On the banking index, it's a solid green candle, but it's also an inside bar if you consider the wick of the previous candle. So but the green close, the final pound green, is 1% move up on the banking index, while Nifty has done nothing, and today is expiry, weekly expiry for the Nifty. Over that. So Banknifty also is having a bearish bias, but Bollinger Bands are clearly showing that it's absolute consolidation sideways. Let's take up the Bollinger Bands and then see the levels. So candlestick wise, it's a flat bearish candle. Banknifty solid green bullish candle, but it's inside the previous big candle, so with a wick, and so it's kind of consolidation only, so absolute sideways. And market is otherwise on a downtrend. If you make a note of my mouse movements, it's a lower low, lower high formation probably. So market may move up further, probably till the 200 exponential moving average or a little more, and then it could probably retrace for the next leg. That's a possibility, but if it sustains with a green close above the 20 exponential moving average, then that's fine. Then probably the trend has, the correction has ended. It's another correction that is 6 to 8% off. That's all. Market correction in the bank index also, you can see that correction. It's a move up, so that yesterday's move was not that powerful, because it met with the resistance and sell-off, profit booking or something happened, and then today it was a solid attempt to move further again, right? So it is below the 50 exponential moving average in Banknifty, and Nifty also, it's below the 50 exponential moving average. So the two major hurdles is to have a close above the 50 exponential moving average and the 20 exponential moving average. So if you look at that, let's look at the levels that way. So 25,000, that way is going to be very crucial. Market is doing nothing but closing at the same 25,000 nearby zones. There or here. So it is a close above it. It's the biggest hurdle. So if that is closed, then you look at 350 something, 320 to be precise. That's where the 20 exponential moving average is. Close by at 25,433. You have the previous breakout zone. So that's our previous resistance, which could act as resistance once more if it moves up. And after that, you have the 25,740. That's where the gap is there. It's a window gap. Gaps are often very powerful. Just above that, at 25,850, you have the another previous breakout zone, which would act as resistance again. So that's about resistance on the upside. Downside, first of all, with the previous swing low that was formed 3 days back, and that's at 24,700 nearby zones. If that cannot sustain, it can go to the 100 exponential moving average support at the 24,406. If that is also breached, the next support would be the previous swing lows at 23,893, but 24,000 that comes before that is a good support because it's a bit grounding dump, right? So you have the Fibonacci retracement levels of 23, which is breached, and it has not gone to the 50 exponential move, 38% retracement yet. That's in confluence with the 100 exponential moving average. So 24,406, if at all it makes another retracement, could act as a good support. Right now, you never know. It's not clear. Let's look at the momentum and the trend later, they'll understand better. So that's the levels of Nifty and Banknifty. Now, looking at the Banknifty, the first resistance obviously is the zone between 50, very close to the 52,000 basically. That's going to be a solid close above the 52,000 would be very good, because that's where the 50 and the 20 exponential moving average, right, clubs together. So that 52,000 is very, very crucial. Right? 51, 9, 52, 5200. That is a zone where the main resistance, that is what it is heading towards. So if that is breached, right, if 5270 20 exponential moving average is clear, then you have to find the next resistance at the gap zone at the 42817, right, which is some kind of a neckline of a rounding pattern, and that zone from there to 53,358 is the neckline, right? So between 52,800 and 53,350 is a big resistance zone. You have a rounding number 53,000 also that's coming in there. So that's resistance on the upside. Downside, the previous low that was made recently, a few days back, right? That's coming at 50,000 nearby, 50,150. That's a confluence with a 50 retracement Fibonacci. So that 50,000 is going 300, 50,000 is going to be very crucial support. And if that is also breached, it can further dip down to the 49,659. Let's see, previous swing low, that's support. That is breached. 20 exponential moving average comes in handy at 49,120. Right? So that's how the supports in Banknifty is all about. Let's figure out what else we can understand from there. So moving on, we'll try to understand the momentum. So medium term momentum, we're not looking there because it's weekend is happening tomorrow. So Fridays will know that, but we look at the short term momentum. Momentum is has climbed into the sideways from the bear zones, and then it's hovering around that about the RSI 40. So that's pure sideways momentum. And momentum has climbed above in the Banknifty also in the sideways, but it's rising up, not flattish, right? So it's all short term sideways momentum with bearish trend remaining, but the bearishness is reducing. That's about the momentum. Open interest we don't know how to see because expiry is over today. We'll see the next week. Now, what else happened? So this is the story, right? This is exactly what happened today. So the major moves are HDFC banks, Axis Bank, Kodak Bank, and the autos, Suzuki and M&M. That's the price action. Bank index, if you see, right? The major HDFC banks, this bank, Kodak Bank, and this bank. The banks performed well today. Yeah, that's why you see a green solid candle there. Now, apart from it, so the heavyweight stocks that contribute maximum, the critic stocks, the 7 major stocks. If you see today, HDFC did the good move, moving up 1.8%, and Kodak Bank 4%. That's a good move. But Kodak is a contrast stock which moves up and down sideways. But HDFC has recovered slightly from the fall that happened a few days back. And Reliance, ICICI Bank and Nifty are just flattish, consolidating flash. But Nifty fell down. TCS also is in bear zones. ITC is in bear zones, but today some flattish closes happened, but its momentum has dipped in the bear zones. So overall, if you see, HDFC's and Nifty has done good. So banks in the bank index have performed. Otherwise, Nifty index as such, excluding the banks, nothing has happened. Now, the different sectors, if you see, IT has given up 1%, pharma has given up 2%, and FMCG also is slightly red along with the reality. So defensive stocks, IT and the pharma, for some reason is going down. Probably something to do with the November US elections or something, I'm not sure, but IT and the pharma are defensive stocks and they are giving up more, while the metal, auto and energy and all that's managing to recover. The thing is, FMCG is the only sectoral index that has gone to the bear zones, right? Heavyweights, also ITC is the only sector. So FMCG is the only sector right now in trouble. Others are all basically sideways. If you look at sectoral indexes or heavyweight stocks that contribute maximum. Mid cap index and the small cap index is slightly flattish right today. It is, you can't say it retraced. It has dipped a little bit. Not too much, not giving up too much, still very close to the all-time high. A recovery happened in the broader market as well, but the market bounced up the last few days. So, broader market reflects in the same way as the main market is showing. So, and now this market is showing some good candles, green candles. So, it's at all-time highs. Nasdaq, Dow Jones, and S&P 500 are so it's some other market and it's green. That's very positive. The thing that is not positive is that FIs are selling. They're selling since more than 50,000 crores in the last 7 or 8 days. That's really bad. It's only the domestic institutions that are bad managing. So FI institutions continue to sell for so many days consecutively is really bad. That's what we need to worry about, right? Yeah, crude is once again it was dipping and it was once again heading up. So it's kind of green. Gold is consolidating before a breakout. So it's kind of green. So overall, the view for the market is neutral sideways. Huge resistance is up there. So as long as it does not have a green close above the next mission moving average on both indices, it is just making sideways moves with bearish bias. So there's every probability that it can make another another high and lower high pattern can form. It can go up and then go down. That's the probability as of now. Until you see a green close above 20, that's the probability that you see. So it is only 6 to 8% correction. Correction could extend to 10, 12, 15. We don't know. So that's what the bias is, mainly on. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.